Boom. Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you guys about why it's looking extremely likely to me that Bitcoin will be seeing $30,000 or less by March 1st. Give or take a few days. Alright, so over the course of this video, I will do my best to talk through and rationalize each of the bearish arguments that I have when it comes to the short term. We will be taking a look at the charts on TradingView, talking technical indicators on both short and longer term time horizons, once again to reinforce my short term bearish sentiments. We will also be talking fundamentals as well. The macroeconomic backdrop, the geopolitical tensions on hands right now are obviously causing for uncertain times in the markets, and markets, at least bull markets, do not like uncertainty. Uncertainty usually favors a bear market, okay? So we will be talking fundamentals as well, tying in some of those macro arguments for the downside. And that's pretty much going to be the focus of this video. Before we get into it, you guys, I do want to address this, okay? Because I know I've been making a lot of bearish content lately, and I know it's not as fun to watch. Trust me, I don't like making bearish content nearly as much as I like making bullish content. Not only because I know you guys like it more, but because it's just not as fun. I'm an optimistic guy. I like being a bull. And I want to make it very clear that I'm still very, very bullish on Bitcoin, on Ethereum, on Mana, Render, all the projects that we talk about here on the channel all the time on a longer term time horizon. But the reality is, and you guys would know this if you've been in the markets for a while, especially if you've played bull runs before, if you've been in these crypto markets before, you would understand that things don't just go up. And that's the unfortunate truth about kind of a lot of the individuals who have gotten involved in the past year or two, and that's perfectly fine. It's awesome to have gotten involved in such an exciting time, in such a revolutionary time. But the reality is that if that is you, you only know upside. And I think that there is a lot of people, it's objectively true that there is more retail interest now than there's ever been. And that's the reality is a lot of the individuals who have only experienced the markets over the past couple of years, like this time last year, was the most manic, most crazy in the best of ways times I've ever experienced as a trader. And now it's the complete opposite. So again, growth unfortunately has slowed down a lot. The markets overall are slowing down a lot, but that's just the nature of the markets. This is cycles, and that's the game of being a trader, being an investor. A long-term investor, you have to understand cycles so you can just control your emotions and not let every move to the downside upset your tummy. And being a trader, you can optimize on how you choose to play these cycles, which is what I'm doing. I want you guys, again, you guys, I don't like making bearish content, but my obligation to myself, to you guys, is to do my best with the data I have available to me to make the best decisions in the short to medium term I can for my long-term net worth. Okay, so if I feel like the market's going to go down in the short term, even if I believe that Bitcoin will be $100,000 someday, which I do, it would make sense to buy it at $40,000, right? But because I'm thinking it's going to go to $30,000 and lose 25% of its value from here, 40,000 to 30,000, 25%, I'm able to obtain 25% more Bitcoin for the long term in the case that I'm right. So that's how I think as a trader. I'm not going to say that's how you have to think as a trader, but if you're trying to optimize returns, that is the most efficient way and obviously the most rational way as well to think if you are a trader, okay? Even if you're a long-term investor, which is perfectly fine. A lot of the in and outs. If you just want to set it and forget it, if you believe in the fundamentals of Bitcoin, again, for most people, that's perfectly fine, and I have nothing against that. But I just want to tell you guys that, or I just want to let you guys know and I assume most of you know this already, but again, that's why bearish content I feel is necessary. Again, I know a lot of you do not even enjoy watching bearish content, and that's fine. You don't have to tune in. But for the real ones, gonna keep making content, gonna let you guys know what I'm thinking, and yeah, just throwing that out there, okay, a little PSA before we get into it. And of course, you guys, if you appreciate this, a like on the video means a lot. Subscribe to the channel. We'll be making videos over the coming days talking about downside targets for Ethereum, Decentraland, Render Token, Sandbox, all these names where I'm excited about buying these after the correction's over, once the dust settles, and where I think these could go, how long I think the correction could take. Got a lot of videos in the pipeline right now that I'm excited to make. So subscribe to the channel. Help your boy get to 50K. At this point, pretty sure we're never going to make it until the next bull run. But hey, It would mean a lot if you guys help me get to 50K. And yeah, let me know in the comments down below what you guys think about this, if you guys think I'm super off, or if you agree with this sentiment. And of course, do your best to rationalize why to me and to everyone else in the comments. Okay. So let's talk some technicals. Before we do that, I do want to read. I'm not even gonna plug the newsletter here, you guys, but I want to read over this just to quickly catch up on the fundamentals, okay? And then we'll quickly take a look at CNBC, just because that's, in a nutshell, that is providing very, very bearish negative sentiment for investors around the world. So geopolitical tensions surrounding Russia, the Federal Reserve about to draw their sword, and by that, of course, I do mean to raise interest rates at an expedited pace, a roller coaster of an earnings season, declining consumer spending. These are all of the macro factors we've been discussing over the past month that have pointed to more downside across the markets. If you guys haven't watched the video I posted right before this, talking about how next week is going to be bloody in the equity markets, go check that out. I get more deeper into the fundamentals there. But right now, just to catch you guys up, again, geopolitical tensions around Russia. Russia could invade Ukraine. Just not even getting into this. I don't want to get political at all. And I honestly, I said this yesterday as well, but I don't think, aside from oil and aside from the fact that China could see Russia do this and get a little aggro with Taiwan, I will say that I don't think this has a direct impact on U.S. economics or U.S. economy. Bitcoin is a global reserve currency, not a global reserve currency, is a global borderless currency, as is all of crypto. That's the beauty of crypto. It's borderless, it's transparent. That's all that good stuff. All the textbook classic arguments about blockchain. So crypto does kind of have that on its side. In terms of the U.S. equity markets, which crypto does hold a very strong correlation to, though, unfortunately, this is bad news for the U.S. equity markets, okay? Because, and just financial markets overall, because, again, it also increases demand for the U.S. dollar. Okay, I'm not going to go to the Dixie right now, but stronger the U.S. dollar, the weaker everything that trades against the dollar, which, as many of you want, I don't know how many of you guys want this, but as many people want Bitcoin to be the new global reserve currency, which maybe it will be 10, 20, 50 years down the road, the U.S. dollar right now, is the U.S. It's the global reserve currency. Jesus, it's the global reserve currency. Therefore, in times of uncertainty, in times of fear, people will flood to the dollar, and then that's a big reason, like gold, silver, precious metals, the things that have stood the test of time, thrive in times of uncertainty. And again, not going to get into the politics of this, not going to get into the specifics of what impacts this could have on the global economy, but the main thing right now is that this is causing fear, and investors, again, bulls do not like fear, bears like a fearish, uncertain environment, and that's why I favor the bears at this moment, and that's why I have, honestly, over the past few weeks. You guys know I've been bearish for a while for all the reasons that we've been talking about. And again, with the Federal Reserve, don't fight the Fed, worked beautifully on the way up. That's what catalyzed the rally initially in Bitcoin, in equities, was the Fed dropping helicopter money, everyone getting stimmy checks, everyone getting the unemployment, and they would just dump it into the markets, because when you receive money for free, you were less mindful of how you spend that money, okay? And that's what was happening to the markets. There was just retail mania, and that's the psychological aspect of what happened over the past couple of years. And now that's tapering off. Now we're slowing down. And now I do think another wave to the downside is in order for Bitcoin and the U.S. equity markets as well. If you haven't watched that video, I recommend going to watch that, especially if you're involved in the stock market. If not, just watch this right now. But again, remember the fundamentals, just all right across the board here. Geopolitical tensions, whack earnings, just slowing consumer demand, which is huge from an overall perspective. These are all fundamental factors that contribute to more downside, and the technicals look terrible as well right now, okay? So Bitcoin is performing, first of all, a little better than its counterparts, and its altcoin counterparts. Ethereum, Mono, Render, Sandbox down 3-4%. Ether holding up a little better, of course, because it's second in command. But Bitcoin is actually, and this is the one argument I will give for Bitcoin to the bull side, is that maybe Bitcoin does act as a chaos hedge. It's proven. I think I have. Type up Royce Jacob Bitcoin chaos hedge. I think you can type that in. I think that's what I titled it. But talking about how Bitcoin is a chaos hedge, it's proven to be a chaos hedge in the past, which is where it acts as a safe haven, similar to gold. Again, gold, global reserve, store of value for thousands of years, for millennia. Bitcoin has acted as that in the past. It will be interesting to see if that happens again. Granted, it has held very tight correlation, or I mean symmetry to the Nasdaq and the S&P 500, which is not good because I think those are going down. But hey, I mean, little glimmer of light in the darkness. There we go. I was looking for some other cooler analogy, but that'll do. You guys see the point. That is the one bull argument, is that this does act as a chaos hedge, which it's kind of doing right now, but I still think it's going to fall. Okay, so again, let me know what you guys think down in the comments below. So Bitcoin, first of all, this inverse head and shoulders did not play out, and I think I talked about this in a Sunday stock watch or two ago. So inverse head and shoulders, this is the shoulder right here, head, this was going to be the other shoulder, and I think a lot of people were thinking, and this is where the first bull trap just came in, a lot of people were thinking that this inverse head and shoulders was going to play out, but unfortunately it did not. Instead, from a short-term time horizon, that inverse head and shoulders was rejected, and at the same time we also broke the line of support on the short-term uptrend. So from the bottom over here, we saw on January 24th that initial scare, which again, it's two-wave. The good old two-wave theory does not only work on the way up, it works on the way down as well. So the first wave to the downside, catalyzing that fear, followed by the relief rally, the dead cat bounce, the relief rally that we've seen over the past few weeks, creating this uptrend, creating this short-term uptrend. Boom, touch point here, creating the line of support here. That has been broken, and we closed a daily and a weekly candle below this line of support, which is confirmation enough to me that more downside is ahead. Now, another little glimpse of light here is that Bitcoin is still technically on the same uptrend, setting a higher high and a higher low, or is still setting a higher low on the short-term uptrend. So this is the previous right here low. You could kind of say this is a low, but this is what I'll say is going to be the point of no return. If Bitcoin does break below this level right here, that would break the higher low on this pattern. But because support has been broken, the line of support has been broken, while the daily Stokes is a big one, you guys, this is what I've been saying for a long time. Daily Stokes are just going straight to the downside. This is not a good combination, and I do, of course, lean bearish. So this is my price target right here. I have the little X right here. You guys know I posted the Bitcoin will be $30,000 on February 1st, which is kind of the irony of why I posted this video, or I wanted to title this video that. Obviously, I was wrong about that. Okay, we're looking good. I think I posted it like right here. We're looking good right after that with that huge dump to the downside, down to like $34,000. Obviously, once again, followed by the relief rally. But I think this is for real now. And I do think that it will be testing one of the same trend lines on this same channel. So the reason that I thought Bitcoin was going to be $30,000 on February 2nd, in the beginning of February, is because that was a previous line of resistance on Bitcoin's overall downtrend. Once again, broken above, proven as new support, and also the new support of this the channel that Bitcoin is now in. So I thought Bitcoin was going to test previous resistance as new support, which it did not. It broke that resistance instead. But now I think Bitcoin is going to be retesting this resistance as new support. Kind of same concept, but it's funny how just we're going up a bar, which would take us also to that exact level exactly a month later on, like March, not exactly a month later, but March 3rd, actually, because February is 28 days, about a month later. So actually, yeah, March 4th would just be about exactly 30 days later. So I do think that this is going to happen, you guys. I do think that we will be retesting this previous line of resistance, this higher tier white line here as new support. That would take us to on March 5th. Of course, you guys, this is very dependent on when these lines are tested, but I want to zoom out here and show you guys what this red line is, because this is one of my first downside target levels. So March 5th, that would take us down to $28,000. Big reason for that, also zoom out a little bit and then we'll zoom out all the way, is because Bitcoin on February 27th, at the end of this month, would perfectly be playing out this massive head and shoulders pattern that we've been talking about, that we were talking about for the past few weeks. We haven't talked about it in the past few videos, but we were definitely covering this in multiple videos a couple of weeks ago. Okay, so anyway, big head and shoulders pattern here. Left shoulder, head, come up, right shoulder, super janky head shoulder, but still the time horizon of this head and shoulders, and just kind of the way this is playing out from a psychological perspective, you guys, all charts is psychology, is a visual of the psychology that's occurring right now. So it doesn't have to be super clean cut. If it's generally the same shape, if it's a general pattern, especially if you have the fundamentals and macro to back it up, then it's very likely it will play out. So macro head and shoulders, left shoulder, head, right shoulder will of course resolve itself at the base of this left shoulder, which was $29,000 back in July of 2021. That would take us, okay, so from here, from this bottom to the top over here, to this high in November 8th, was 110 bars or 110 days because we're on daily candles. You mirror that, take it right there. That would take us to, again, February 27th, end of this month, take us back down to actually resolve that head and shoulders at about, maybe not $28,000, but $29,000, okay? So I think that's very likely as well. That's another argument. And then something I've said for a lot, and this was something you'll always hear in bull markets, in bull cycles, in hype cycles, is a reversion to the mean or revisit of the initial highs of the rally. Okay, so Bitcoin obviously did come to a low over here on June 22nd of 2021, down to $28,000 because it did see this high over here. It's proven this as a historical ceiling and floor in the past. So I do think $28,000 is likely. But honestly, I wouldn't be surprised at all to see Bitcoin revisit $24,000. If you guys were around in 2017, then you would know that the high back then was $20,000. Okay, so the way cycles work a lot of times is, especially in crazy bull markets, is during the corrective periods, during the crash, the bear market. It's pretty damn common to revisit the previous high from the last bull market, which was $20,000 in 2017. So do I think we'll come back down to $20,000? No, I don't, because Bitcoin has established itself as too dominant a player in the global financial markets, and it's just too many people find it too valuable at this point. I do not think Bitcoin deserves or will come back down to $20,000. Can it come down to $24,000? Okay, I think that's going to be a lot more likely. $25,000. I'd personally be a buyer of Bitcoin at $25,000 because I actually do over time think that that's where it will bottom out. Okay, so $25,000 was this level over here. Again, $20,000, it's too obvious, and I don't think that'll happen once again. So $25,000 would not be surprised at all. Maybe 24 at the lowest, but $28,000 is a good start. And maybe over the course of March, April, if things really do continue to get ugly and uglier and uglier, then maybe we come to 24, trade in a range between $25,000 and $30,000, and then go sideways for a while. That's the reality. It's going to take a while. It's going to take sentiment to come back. Optimism takes a long time to come back once you've gotten punched in the face. So that will take a while, but hey, the next bull market, I do think this recovery will be faster than the years prior. I don't think it's going to take a few years. Things move faster now. I think it'll probably take a few quarters, maybe even a year and a half or so before things really start picking up again, because the space, of course, is still obviously evolving at a rapid pace. We'll be covering other players very shortly. So once again, subscribe to the channel. Let me know in the comments down below what you think of this analysis. And yeah, catch you guys next time. Until then, always remember, take action, make waves. Peace, guys.